There is no Bitcoin standard. So the time for you to worry is 50 years from now, when all the money in the world is Bitcoin, when Bitcoin is 450 trillion and it's worth, go figure, $50 million a coin, and then the currency of the country you live in is backed by Bitcoin, then you might see that what'll happen? The more likely thing is that currency, the whatever yo-yo dollar, will be pegged to Bitcoin, and then someone will take over the government and said, hey, we're going off the Bitcoin standard. But they're not going to get rid of Bitcoin.
As global markets shift and digital assets gain traction, Bitcoin is emerging not just as a financial asset, but as a revolutionary store of value. In a recent interview with Mario Nawfal, Michael Saylor shared insights into why he believes Bitcoin's price is poised for a significant rise, potentially reaching new heights. He highlights Bitcoin's limited supply and decentralized nature, which make it a powerful hedge against inflation and economic uncertainty. Once seen as a fringe experiment, Bitcoin has evolved into a core asset for institutional portfolios, driving both demand and legitimacy. Saylor emphasizes that as traditional investment avenues face challenges, Bitcoin is becoming a key component in diversified portfolios, attracting major financial players and institutions. This growing institutional interest underscores Bitcoin's role as a reliable, non-governmental asset in times of global instability. For the first time, institutional investors now have secure, regulated channels to invest in Bitcoin, bridging traditional finance with the emerging digital asset space. Saylor discusses how these developments position Bitcoin to potentially surge in value, with institutional support adding a layer of stability and confidence. Now could be the critical moment to buy before the next major price surge.
Thanks for joining us again. Enjoy the video.
Gold may be regulated, but it's also worth like $15 trillion, and Bitcoin is worth $1.3 trillion. So if we end up with the failure of gold, Bitcoin 10x's from here. So in terms of being regulated, it is regulated, right? The IRS regulated in 2014 by saying it's property, you have to pay tax on it when you sell it. And it's regulated via these ETFs. So if you're an institution and by charter you have to own securities via a regulated custodian or via a regulated bank, you're buying FBTC or you're buying IBIT. Just like the SEC just approved options trading, but only on IBIT. So there are regulations. The regulations solved the issue of custody. They solved the issue of compliance. And that's why these spot Bitcoin ETFs are the most successful ETFs in the history of Wall Street, right? Billions of dollars is stampeding into those instruments. Oftentimes what's going on is the regulated instruments, like IBIT is one, but so is MSTR. They're basically regulated securities trading on high volume stock exchanges in the United States. There's a lot of liquidity, a lot of traditional capital that can trade those instruments. That's why they buy them, sell them, and trade them. And so no one's saying it's not going to be regulated. In fact, it's the opposite, which is as it's regulated, it's the green light for traditional money and institutional money to enter the asset class. Well, I mean, that was the question people had in 2013. I mean, in fact, I thought that in 2013. I tweeted about it. If the government was going to crush it, like the IRS, doesn't designate stolen property or counterfeit money as property, right? If you're counterfeiting stuff, the IRS wouldn't give you a designation of property. So we lurched towards something clearly being legitimized in 2014, and then between 2014 and 2020, it was a question mark. But then in 2018 or so, you started seeing options on CME trading on Bitcoin, if you recall. And so that was another endorsement. And then when Fidelity entered with Fidelity Digital Assets, that was a third endorsement. When dozens and dozens of public companies started buying Bitcoin and were approved by the SEC to buy the Bitcoin and list, that was a fourth endorsement. Then when you actually saw the last administration, you saw positive speeches and characterization of Bitcoin as a digital asset. In fact, Gary Gensler, Jerome Powell, Christine Lagarde, and Janet Yellen all acknowledged it to be a legitimate digital asset. They said Satoshi created something innovative and real, And by the way, they classified it as a speculative asset, but not as a currency. The real uncertainty around Bitcoin has been around its use as a digital currency, not as digital capital, right? If you're holding something and you want to do 10,000 transactions without any AML KYC at any size, now you're crossing over banking regulations and currency regulations, right? And that's highly controversial. But what's not controversial is whether institutions and individuals and corporations in the Western world can own property. So it's been acknowledged, like Berkshire Hathaway can own billions of dollars of Apple stock, right? Warren Buffett's not going to wire $1 billion of Apple stock to Africa without acknowledging that transaction publicly. So the use of Apple stock as currency would be controversial, but the use of Apple stock as property or capital.
Michael Saylor is sounding the alarm about Bitcoin's regulatory momentum, which he believes could lead to explosive growth. With a current market cap of around $1.3 trillion, Bitcoin still trails gold's $1.5 trillion valuation. However, Saylor is optimistic that Bitcoin could surpass gold if it starts to replace or compete with it as the primary store of value. Since 2014, the IRS has classified Bitcoin as property, making it taxable upon sale, and now institutional investors have regulated investment options like ETFs, such as FBTC and IBIT, approved by the SEC and CFTC. This regulatory green light is fueling institutional confidence and positioning Bitcoin ETFs as some of Wall Street's most successful assets, paving the way for massive institutional adoption. Saylor compares Bitcoin to owning valuable property, especially in regions with strong property rights like the US, Europe, and China. While Bitcoin faces restrictions in countries such as Cuba and North Korea, its mainstream acceptance is growing rapidly, with influential players like BlackRock managing Bitcoin holdings. Despite the rise in regulation, Bitcoin remains 95% decentralized outside of ETFs, preserving its secure and resilient structure for long-term gains. As more institutions jump on board, Saylor believes Bitcoin is primed for even greater adoption and growth.
And watch more clips to gain insights from Michael Saylor.
When you think of Bitcoin as, I own a building, right? Am I allowed to own a building? Well, the truth is you can own a building in China as well as in the United States or Europe. You know where you can't own a building? Cuba or North Korea. So where it's illegal to own property, then Bitcoin is in a regulatory gray zone for sure. But where it's legal to own property, you're going to be able to own it. And I think we've crossed that chasm between 2020 and 2024. It's quite obvious, right? If BlackRock is handling the asset, if there's 100 public companies handling the asset, if the SEC is approving options trading on the asset, and if the CME trades commodity options approved by the CFTC, it's pretty obvious that the asset has been adopted and is supported by the regulators. So I think we're past that question. If you go to Bitcoin treasuries, you'll see that 95% of the Bitcoin isn't in these ETFs. 20 for every dollar of Bitcoin in the ETF, $19 is not in the ETF. So Bitcoin is already a global asset outside the control of any nation state or any company or any actor. And that's what makes it so special. And if you think of it as property, it's no more risky for a New Yorker to buy $100 million of Bitcoin than it is for a New Yorker to buy $100 million worth of warehouse space in Manhattan. Right? No one walks around New York saying, oh my God, the government's going to seize my warehouse space because they want to devalue the dollar. You're like, well, are you kidding? The government isn't backing the dollar on warehouse space in Manhattan. So it's just a piece of property that you're holding for long-term capital preservation. And where you're going to get yourself in trouble is if you don't pay taxes on your warehouse space in New York City, or if you want to transfer $100 million worth of Apple stock to somebody in Africa and you don't want to talk about who you sent it to, right? Right. But those are problems that people that have $900 trillion worth of assets have today already. We're not going to change the politics or the geopolitics of the world here. What we're doing is giving people a better investment than Google. That's the point.
Bitcoin's recent price movement highlights its volatile yet promising growth potential. On November 3, 2024, the price briefly dipped to $67,400, reflecting a modest 1.2% drop for the day but a 2% increase over the week. With 24-hour trading volume reaching $24.5 billion, the interest, particularly from institutions, remains strong as many anticipate a price surge. Bitcoin's occasional dips are seen by some as strategic entry points, offering opportunities for those willing to capitalize on short-term volatility. Upcoming events, such as the U.S. presidential election and decisions from the Federal Open Market Committee, could further boost Bitcoin's appeal as a hedge, especially if economic stimulus measures weaken the dollar. Bitcoin's market dominance at 59% reflects growing confidence, with traders seeking stability in top assets amid ongoing uncertainty. While market fluctuations have caused Bitcoin to dip temporarily, analysts caution about a potential drop to $66,000, yet institutional demand remains robust. Companies like Strive Enterprises are launching Bitcoin-focused ventures, further solidifying its status as a mainstream asset. Despite short-term volatility, Bitcoin appears poised for significant growth, particularly in the current financial climate. Do you believe Bitcoin is headed for explosive growth? Is decentralized finance the future, or will traditional institutions continue to dominate? Share your thoughts in the comments.